At this time, global growth has slowed. It has stalled. This has been apparent not just in one or two countries, but in most countries around the world. Problem after problem arises, and the US financial media still projects their favorite statistics: unemployment rates, jobs numbers, and fake inflation rates. But what's the truth? Well, you came here for the truth, so let me unveil that for you. I want to show you what's really going on. You're not going to get that in the mainstream media. That's why you're here. I went through and found this Double Line Funds PowerPoint presentation, brand new info. There's a whole long list of charts. I went through all of them. I selected the ones I thought would be most pertinent to cover today. So let's get into it right away with this. MSCI ACWI, that's the All Country World Index. And that compares to the central bank balance sheets. And it does so very, very well. This blue line here is the MSCI ACWI index. Looking at all the countries around the world, their stock markets, and it's been rising since 2009. That's very clear. Now, we've seen some changes more recently, that's for sure. But I want to compare the two on the average. We can see that the Fed, which is the red color, green color here, the ECB and the BOJ in the purple, they have all been printing so much money since the financial crisis, all right? Now we have the Federal Reserve that has decided to taper somewhat this quantitative tightening program, barely anything so far. However, during this period of time, we have the world very, very worried. In fact, multiple central bankers have come out and pleaded with the Federal Reserve, pleaded with the United States not to continue this quantitative tightening. It will be disastrous for emerging markets. We've already seen it happen. So we had the Q3 program and they stopped it at this point. Now, many people said, well, you know what? This has been the greatest thing ever because we managed to stop the QE program and yet the stock market has risen. Congratulations, we figured out the key to permanent and never-ending stock market increases. Well, you need to look into it a little deeper than that. You can see around the world, we had all of these central bankers, after a small dip, very, very slight, they decided to ramp up the printing presses yet again. And here we have it. The All Country World Index compares and correlates so perfectly with central bank balance sheets that it cannot be ignored. Although everyone generally does, individuals are not willing to look at this simply because they are too invested. Pun intended. All right, now look at this next chart here where we have the CAPE ratios, S&P 500 versus the MSCI emerging markets. Now we're looking at the S&P 500 today being at 32.51. Historically, this is completely abnormal based on what I've seen. It tends to be around 16 to 17. Now this goes back to, I believe, 1871. So if we track that back to the year 1871, up until today, it's about 16 to 17 or so. If you look at it in the past, let's say 20 years, I believe that this number is definitely higher than 16 or 17. We can see that things get more extreme as time goes on. However, it's nowhere near 32. That is very absurd historically. All right, so we're seeing that increasing. Now that's the S&P 500, but the MSCI emerging markets has some very different situations, and today sitting at 16.31. So it's more along that average of the US average, that is, of 16 to 17. But when I look at this, I need to know which country, because each country is different, and taking the emerging markets as a whole, I think is really it's short-sighted. It's not going to look at the whole picture. So I wanted to show it to you regardless, because I think it's important to know where other countries around the world are at. Remember, this is not just one country. It's not one market. Even the US itself has multiple stock markets. So we cannot just focus on one, even though most people's investments are just in a few of those. I can remember the letters in the alphabet, and I won't even touch on them. I know what you're thinking that I'm thinking. S&P 500 versus the All Country World Index, excluding the US. I just showed you this maybe yesterday or the day before, and I want to compare it to another one here. Looking at this, I can see something very clear. All markets around the world were rising and rising and rising. Here we go. It's so wonderful. And everything was good. The market was doing so well all throughout 2017, right up until the end of January. We had markets breaking new highs all the time. The euphoria was in. The money GPS was a fool. And then the VIX broke. And all markets tumbled together. It didn't matter about the strength of the US dollar. It didn't matter about the price of gold. It didn't matter what oil was doing. It didn't matter about inventories. It didn't matter about what commodities looked like. It didn't matter about imports. It didn't matter about exports. It didn't matter who held the throne in any particular country. It didn't matter what was going on in the media. It didn't matter what was going on at home, in the economy, in the market, and anywhere. Everything started to tumble. And then they came in and saved the day. And then we had a change of heart. The S&P 500 escalated higher, and all countries, excluding the US, continued to fall. And it's still like that today. In fact, today we see China's stock market, last time I checked, which it was yesterday or the day before, 25% down. Many would argue that's not a problem, but I think that is a significant drop. It is a bear market officially, 25% down. Look at other currencies around the world. My goodness, they're taking a beating this year, an absolute beating. And it's, you look at all of these, it's not just emerging markets. This is literally All Country World Index excluding the US. I can show you emerging markets. That's pretty much the same chart. And we look at that. Everything rising together all up until that point of the VIX. The VIX, who cares about the VIX? It's nothing. And yet that was the moment that everything tumbled. That's how weak this market is. That the VIX, everybody was shorting the VIX. And then that trade happened to be very, very bad all of a sudden, and you had a tumble. Everything fell in sync together. It was like the bottom fell out underneath the market. Like the crutch was taken away. Interesting. Anyway, so that's emerging markets, or you can look at the All Country World Index. Either way, we've got a problem. Now, with the VIX, I want you to just hang in there because I'm going to show you a chart that correlates to that in a minute. But I wanted to show you global growth slowing down. Synchronized global economic growth begins in October 2016, but look at where it has gone in 2018. This, whether you're looking at the Euro area in blue, has been just beaten down recently, or the United States, UK, Canada, Japan, and emerging markets are all taking a beating right here. Yes, Euro area clearly suffering throughout. I mean, I've been covering it for you, but we're going to see this actually get a lot worse, whether you're looking in terms of global growth, whether you're looking at the currencies. It's not going to stop anytime soon because the problems haven't been resolved. You can't paper over a mess created by too much paper. It just doesn't work. It's like adding gasoline to the fire. Now, we've got a problem right here with bubbles. A lot of people like bubbles. They like to chew gum and they like to blow bubbles. And that's good, except when we're talking about the stock market, it's not the same kind of bubble. It's not fun. When it pops, That's fun when you're chewing bubblegum. When the bubble pops in the stock market, people lose their job. Pension funds start to underperform as they are today. Still haven't made up for the mess from 2008, 2009. Okay, 10 years out. And you have the ripple effect that occurs in the economy. People losing their jobs, suddenly they can't buy more things, suddenly they start pushing things further, then they're defaulting on their debt, then the bank starts to have all of these on their books, they're having some trouble, we have bailouts, we have help coming in, we have quantitative easing, we have all the stimulus packages, and welcome to today. Dow Jones Ecom Index, Amazon, Netflix, Google, and Facebook, you could just say FANG stocks, all right, up 617%. That's the third largest bubble of the past 40 years. US tech market cap, $6 trillion, exceeding that of all companies in the Eurozone at $5 trillion. A handful of stocks exceeds the value of all companies in the Eurozone, not just one country. We're not just saying, well, it exceeds the value of Italy's companies. It's all the companies in the Eurozone. It's just mind-boggling. It's mind-boggling. And this is still, remember, the ECB has been funneling money into these Eurozone companies. And still, this is truly unbelievable. Now, Facebook, what they're showing here, a comparison in population here. Facebook, 25,000 employees. Their market cap is greater than the MSCI India of 1.3 billion people. Now, it's of course unfair to do this comparison, but they're just showing you here how one company's market cap can be bigger than an entire country. So this is the point I wanted to make. The reason I mention this is that when you look at it, we've got the individuals out there, they're investing, okay? Whether it's the institutional investors, but generally the retail investors, they're looking for results today. Maybe tomorrow, maybe next week or next month. They're really just focused on today. Can I make money today? I'll sell tomorrow. If things are really bad, I'm just going to sell tomorrow. But I want to make money today. Understandable. I get that. Okay. So these individuals, they put money not into an emerging market. They want money today. They don't want money 5 years from now, 3 years from now, 2 years from now. They want the money today. So what do? They invest in FANG stocks because that's the highest return in the shortest amount of time. Hey, I'm not denying it. That's where the QE money is going. The QE money isn't going as much into the emerging markets. They're finding their way into US stocks, particularly the FANG stocks. So this is the problem that we see today, where money is flowing into fewer and fewer hands, and I've documented that here on this video, as well as, probably about 2,000 other videos now. Don't go anywhere. Make sure you watch part 2 of this video. I really get into some more detail here. All you got to do is click the link in the description, and I'll see you over there.